Welcome to Talk the Walk. I'm Sarah Wong. Russia's war on Ukraine has entered a new phase, and military analysts are expecting a protracted and difficult battle in the eastern part of the war-torn country. As fighting rages on, the World Bank expects a staggering 45.1% drop in Ukraine's GDP and has further slashed the global economic growth forecast. The International Monetary Fund is also expecting faster inflation while countries struggle to return to pre-COVID economic strength. Let's bring in Clifford Bennett, Chief Economist at ACY Securities, to discuss the global economic outlook against the backdrop of Russia's invasion of Ukraine. Clifford, welcome to Talk the Walk.
Hello, Sarah. Thank you very much. Pleasure to be on your show.
Now, Clifford, you're not optimistic at all about the current state of the global economic outlook. For example, on April 14th, you wrote in a memo that we have not seen the top in either energy or commodity prices. Earlier, you wrote, we're looking at a recession in Europe and a risk of recession in both the USA and China, with the addition of intensifying, not reducing, supply chain disruption. Global growth and trade will suffer as the result. Tell us why.
Thank you, Sarah. It's a very good summation. It's a significant tragedy, of course, that we have a war, but it's coming hot on the heels of other issues, as we know, coming out of the COVID supply chain disruption, which has been global and greatly impacted people's lives in a variety of ways. The situation in Ukraine, though, I think it's a little bit like COVID. At the beginning of COVID, people weren't expecting it to last too long, and we'd come out the other side, and one could look, as an investor, one could look across the valley. That proved to be actually reasonably accurate in terms of the stock market, but it wasn't so true on the ground in Main Street anywhere in the world, really. I think the problem here at the moment with the Ukraine situation is that this war could well last into 2023. But even if the war were to end tomorrow, the price shocks that have already been recreated will be continuing for some time. Because it's not just about a market reaction to the fear of war, it is about actual supply shortages of wheat, soy, linseed, palladium, nickel, and of course, the dependence on Russian gas has certainly seen a spike in energy prices. So it's another wave, tsunami wave of inflation, if you like. And a lot what some people didn't quite understand, the Federal Reserve didn't understand, for instance, about the first wave of inflation. It wasn't just supply chain disruption, which again, everyone thought would go away quickly. It wasn't just supply chain disruption that was generating these higher prices. It was also that from the corner store to the global corporation, suddenly you no longer had competitive global price pressures. Suddenly you had a wonderful cover story and excuse to be raising prices. So every business in the world almost took advantage of this opportunity to raise prices, to increase profit margins, and that's partly justified too because of the uncertainty and the need to have a fatter profit margin to support, in some cases, fewer clients, but to maintain the business, that sort of thing. But there was also a lot of, I guess, you could call it price gouging, or just taking advantage of the first time in quarter of a century that businesses could raise prices without losing market share because they had a justification to their customer, that their customer would absorb and take on board those price increases. So that was why I always felt, and I've been saying this since the middle of last year, that inflation wouldn't be transitory, as the Fed was saying, and most people expected, that there was more to it than a temporary supply chain disruption. So why I'm sort of harping on about that a little bit is you've got to understand there was already a high base, a high tide, if you like, of inflationary pressures still in process. And then we've had the war happen on top of that. So it's going to be very difficult for major economies of the world, particularly, it's almost like it's a little bit of a northern hemisphere thing, Sarah, in that Europe, no doubt, will be going into a deep recession. For how long, I'm not sure, but consumer confidence there is falling off a cliff. Business sentiment is being hit. And you can understand that if you were living in Europe at the moment, you'd probably be a little bit more cautious than usual about spending on consumer items, going out so much. These things will still happen, but not to the same degree that they might have. And that too will slow economic growth in that region.
So Clifford, yeah.
Yep.
So Clifford, what you're saying is, apart from the combatants, Russia and Ukraine, you think that Europe is bearing and will continue to bear the most brunt economically from the ongoing conflict in Ukraine?
Yes. Well, I mean, obviously, Ukraine and Russia first, but outside of Ukraine and Russia, yes, definitely Europe will feel it. We're all just beginning to be enlightened about how important Russia and Ukraine are to the global economy in terms of both agricultural and mineral products.
Yeah, absolutely.
And that's going to cause some disruption, but also shipping is greatly disrupted because a lot of shipping lines have stopped going to Russia, which means their global timetables of how they move ships around the world is disrupted. So there's all sorts of sort of blowback problems from that. And then we not only have government sanctions on Russia, but we have private industry, private company sanctions now being independently applied, or businesses withdrawing from Russia. And that also will, create some problems for European companies in terms of their profitability. We just saw this week that Netflix has had a big drop in subscription numbers, and that, of course, is because they stopped supplying their Russian market. So they lost about 700,000 subscribers in that decision. One might argue the more influence we can have in Russia via Western media, the better, but Netflix took that decision and it's impacted their business. That's the kind of thing we will see throughout Europe. We may not hear about it in the headlines, but also some of those sanctions are to some degree a two-way street. And if you're not exporting, then obviously you're not selling your goods. That's a downward weight on the European economy, as well as the high inflation pressures. And when we come to energy, people forget that the gas pipeline from Russia to Germany, for instance, supplies sort of maybe around 30% of Europe's energy needs. But for Germany, it's 40 to 55% of energy needs. And some of that gas pipeline actually generates electricity for Germany. So Germany could actually have blackouts were Russia to weaponize energy. And that's another risk for the global economy, that energy becomes weaponized. In which case, if Russia feels too harshly isolated, mostly by Europe, the United States, and then Canada, Australia. It's not a global isolation. I mean, Africa, South America, much of Asia is not isolating Russia over this. So it's very much a Western force. But if Russia were to feel too greatly cornered and hampered, and too much blowback from Europe over this, and I'm not justifying the war at all, I'm just saying what the possible reactions could be within Russia, then perhaps they could dial back the gas pipeline 25, 30%, and that alone would create significant further disruption to the European economy. But it's mostly the degree of consumer confidence, business confidence. I mean, if people are feeling a little bit uncertain and don't want to spend, if small, medium, large businesses wind back on fresh investment in their businesses for the time being, just to see how this evolves, all of that will add significant weight, and we will see a European recession.
You obviously touch on a few great points here, and we know that I think you're absolutely right that sanctions are a two-way street. Russian President Vladimir Putin has declared that, whether premature or not, that Western sanctions have failed now that the ruble exchange rate has nominally recovered to the pre-war levels. Now, you're the man with the label, the world's most accurate currency forecaster. Are we seeing a repeat of 2015, when Putin's regime regained its grip with sanctions triggered by his annexation of Crimea, while at the same time grumbles started to rise within Europe and other countries which are imposing the sanctions?
Yes, Sarah, I tend to agree with very good points, but can I just say, yes, world's #1 forecaster of currencies, but not on every occasion. So hopefully I do get this one right for you. It is the case that the sanctions have immediately benefited the value of the ruble. I mean, if you're still exporting, and Russia still is exporting a lot, to the rest of the world and obviously with the gas pipeline, but all of your imports have stopped. Obviously, your trade surplus goes through the roof, and that's very supportive of your currency. And also, if ruble is being demanded as the form of payment by Russian companies for the purchase of any exports, not just the gas, which of course there's a debate over, and several countries are refusing to pay in rubles. But there are other instances of exports out of Russia where the companies themselves are saying, no, we want rubles, not US dollars. So there's a rush to buy rubles, if you like. So there was that immediate shock. And then the immediate recovery. And in fact, the ruble could continue to appreciate from where it is now. Is that a win? Well, really, it would have been better for Russia if the ruble stayed lower, because then they'd be, selling their goods at ever higher domestic prices equivalents. I do think the Putin regime, if you want to refer to it that way, the Putin government does have the capacity to be ongoing and survive the pressures from the West. I think that's certainly the case. I think sometimes we tend to overstate the risk to the Putin regime in terms of it toppling. And I think the Russian people, who at first were very much against the war, if they see the rest of the world actually wanting to punish Russia too harshly, it could actually cement Putin's position. So it's all about sort of fine-tuning and balancing exactly what actions are taken by the West towards Russia, so that Russia, I guess, from a Western perspective, from that US and NATO perspective, is punished. But, the saying about don't corner a wild animal because you never know what it might do is also very relevant in this situation. So I think, yes, I mean, we've seen strong retail sales in Russia just hit a 9-month high. Is that some of that people stocking up? Perhaps. Unemployment's very low, around 4.2%. Of course, all of the importing stores have shuttered up and closed, but that doesn't mean the Russian economy as a whole is on its knees by any means. So I think probably the situation in Russia is better than we would perhaps recognize in the West.
All right. Well, we'll be following this situation, of course, and we'll talk more about that after the break. We'll be back in a moment. Stay with us.